In the third quarter of last year, both retail and investment banking confidence levels were at significant highs. But into 2014, retail banking confidence sank on strike action and concerns around unsecured lending, among other things. In line with positive global market performance, investment bankers saw confidence rise. But since the second quarter of the year, retail banking sector confidence has risen somewhat, while investment banking confidence has slipped.
Locally, we've seen a weak economy, we've seen a downgrade in the banks, and we've seen a significant weakening in the rand, and that has had an impact on the confidence levels for the investment banks.
While retail banking confidence has risen, it's coming from a low base, and with investment banking confidence coming down, the overall confidence gauge has remained steady. Despite this, banks reported healthy first-half financial results, with both revenue and profits seen rising in double-digit territory. EY found that a slowdown in bad debts had helped boost bank profits and a general better handle on costs.
Cost containment is definitely a factor. We've seen over the last number of years that the banks have been very cost conscious and have managed to keep costs down. It has lifted slightly in the last year, and that is partly due to investments in, amongst other things, IT infrastructure. But looking at the income side, investment banking growth has been quite positive. At the same time, the banks that have operations outside of South Africa has also shown good increases in contribution from those markets.
Another boon for bank revenues is the fact that interest rates have risen by 75 basis points since January. But non-interest income has been more pedestrian, reflecting greater competition in the sector and a generally tough economic environment. Nampumelelo Siziba, SABC News, Johannesburg.